Stocks on Wall Street end mixed. The S&P 500 hits a new record high fueled by Oracle's monster rally. The Nasdaq ends near the flat line while Dow Jones ends with cuts. The wholesale price unexpectedly declined, increasing hopes of a Fed rate cut next week to boost the economy. Asian markets track cues on Wall Street and have opened mixed ahead of the key CPI inflation data from the US. The GIFT Nifty is also indicating a subdued start for our own markets. Crude oil prices settle higher on possible supply disruptions after Poland downs Russian drones in its airspace. Meanwhile, gold also continues to hover near all-time highs as the US producer prices slipped in the month of August. IT major Infosys will be in focus today as its board meets to consider the proposal for a share buyback. This will be the fifth one since Infosys announced in the last 8 years. An all-important session lies ahead for us in the Indian markets. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Centre. I am Hormuz Fatakia. Let's first start up with how the Asian markets have opened up this morning. And it is a mixed picture. Hang Seng is the underperformer today, almost 1% lower. On the flip side, the Taiwanese index is 1% higher. But what has hit a new record high today is the Nikkei. And it's now 0.8% higher today, well above the levels of 44,200. And this is courtesy a 10% surge seen in shares of SoftBank. That has contributed to the Nikkei in today's session. The Kospi too trading above the flat line, 0.3% higher. The Shanghai Composite though has had a subdued start to the trading day. But pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. Well, they're looking to take a bit of a breather today after a 6-day up move. But for now, the implied open is suggesting an 8 to 10 point uptick at the start of the trading session. But to set you up for today's trade, we have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course, the setup on the F&O side of things as well. First up, Vamakshi is here to tell us all the important cues we need to watch out for today. Vamakshi, good morning. Looks like you're taking a bit of a pause now after a 6-day rally.
Absolutely, Hormaz. Yesterday was a good session, but largely this was driven by the thawing relationships between India and US, given the kind of comments that came in from both President Trump as well as Prime Minister Modi. Nifty crossed the 25,000 mark intraday, but could not sustain above those levels. But the broader markets, though, they continued to outperform. Take a look at the mid-cap index as well as the small-cap index. Both of these indices ended with good gains. What actually led the rally for the second consecutive day is the IT stocks, and this move was largely driven by OFSS, Persistent as well as Coforge. PSU banks also rose on reports of the government's consolidation plan. Take a look at Bank of India, Union Bank. Both of these counters were up almost 4% each. Now, auto stocks on the other hand, they did see some profit booking. In fact, the top 5 Nifty losers were some of the auto stocks like M&M, Maruti Suzuki as well as Bajaj Auto. Now, let's look at the handover that came in from the US markets. It was a mixed handover. The US PPI unexpectedly declined in August, furthering expectations of rate cut from Fed. S&P 500 jumped to a new record high. It closed with an uptick of almost 19 points. Nasdaq was up almost 6 points, but the Dow Jones was down almost 220 points. Now, as far as today's session is concerned, a lot of important economic cues to watch out for. The first one being the US CPI data, extremely important. US initial jobless claims as well. Apart from that, ECB's interest rate decision is something that we'll be watching out for. Infosys will also be in focus. A board meet is scheduled today in order to consider a buyback. It will be the first since 2022, and EU's commissioner will be visiting India for an FTA talk with Commerce Minister Piyush Goyal. So that is also something we'll be watching out for. Now, the GIFT Nifty, pull up that, as Hormaz was indicating, it's a flat start for today's trading session.
Flat start indeed. Vamakshi, thank you for that update. Over to Upasna now, who would list out the stocks that you need to watch out for today. Upasna, good morning. What's on your list?
Very good morning. First up, let me start with Tega Industries, the company to acquire Molycorp in consortium with Apollo Funds at an enterprise value of as high as $1.5 billion. Next up is Mazagon Dock. The company has updated that the negotiations with Indian Navy with respect to submarine P-75 have commenced. Next up is Bajaj Finserv. The company has come up with its August update for the month of August, and the company's life insurance total premium stands at 1,484 crore, and company's general insurance gross direct premium underwritten stands at 2,063 crores. Next up is Deepak Fertilizers. The company inks agreement with Sunsure Energy for solar and wind power investments to secure 26% stake in the captive renewable projects. Next up is RVNL. The company has emerged as the lowest bidder for a West Central Railway project worth nearly 169 crores. Next up is Jupiter Wagons. The company's subsidiary bags order worth 113 crore. This is mainly a railway order for 9,000 axles. Next up is Premium Explosive. Again, on the back of order win, the company has received order 7.8 crore from Ministry of Defence. Shah Metallics also in focus as companies announced a strategic foray into crash barrier segment, aiming nearly a market share of 8 to 10% in FY25, FY26. And lastly, Keystone Realtors also in focus as the board has approved fundraising of nearly around 375 crore via NCDs on a private placement basis. So all in all, we'll be watching out for all these stocks today.
Upasana, thank you for that list. And finally, over to Sudarshan, who will highlight cues from the FNO space. Sudarshan, good morning. The 25,000 mark continues to remain elusive, but is the FNO data indicating a move above that today?
So I'll start with a summary of how is FNO data indicating and what exactly it points to. So I've just taken the 4 important points. First one is that over the last 6 sessions that we have seen an up move in market, it's mainly on the back of short covering post the recent underperformance that our market has seen against the peers. Second, sentiment has improved on the back of positive commentary coming in from both US and Indian US President and Indian Prime Minister. And third is volatility has reduced, and that is reflecting in the India VIX. And last one is even FIs on the FI selling front. Selling has come down over the last few sessions. So how was yesterday's session? It was largely led by Nifty IT, in which most of the stocks have seen short covering, while few have seen fresh buying as well. As far as Nifty Bank is concerned, it's remained still in the wait and watch mode. For market to move higher, Nifty to firmly cross the level of 25,000, Nifty Bank has to perform well. As far as the cash flows are concerned, yesterday we've seen FIs selling of 116 crore and DIs buying of 5,000 crore. But do factor in Kotak Mahindra Bank's block deal of rupees 6,000 crore in DIs buying that you are seeing of rupees 5,000 crore. In the index futures too, we have seen FIs buying almost rupees 700 crore. Good parties, they have added long positions of around 4,000 contracts, and now FI's long exposure has improved to 10%, but again still on the short side it remains around 90%. How does option data indicate what exactly it's indicating? So 25,000 call was very healthy, and it has seen an increase in the premium to 118 versus 78, and similar move was seen in even 25,200 call, where premium has moved higher to 41 from 26. On the put side, 24,950 premium has come down, and the similar thing was for 24,900, where also premium has reduced to 63 from the level of 126. So it tells you on the downside for now, immediate support for Nifty would be around 24,900, but if we slip below that, next support comes around 24,832. Resistance, immediate resistance would be around 25,050 to 25,100, but for fresh buying to come, Nifty has to cross the level of 25,150. That is the recent high. Lastly, few stocks. One stock remains in the band is RBL. I have taken 2 stocks. Yesterday, M&M has seen fresh shorts on the back of the news that BYD people are coming to India to meet Prime Minister, and Indian Bank is near record high. So keep an eye, because all the PSU banks also were buzzing in trade yesterday.
PSU banks, indeed, keep an eye out on all of them. Sudarshan, thank you for that. And the next major news point for the day today is, of course, Infosys, and the board will be meeting today to consider a buyback of its equity shares. Rima is joining in for more on this. Rima, morning. Tell us what is in store for Infosys today.
Well, this would be the company's 5th buyback since its listing in 1993. And the stock, since the announcement that the board is considering a buyback today, has actually done pretty well. It's gained close to about 5.5% over the last 2 days. So quick run through of what the street is anticipating. So Morgan Stanley put out a note saying that we expect the buyback to be in a range of 10,000 to 14,000 crore rupees. Historically, the buyback price has been at a premium of 18 to 25%. And now remember, according to the new rules, an open market buyback is no longer permissible. So it's going to be a tender buyback, which means the company will buy back at a higher price, at a fixed price. So that's important. But typically, when you do the analysis of how the stock moves post the buyback, it's not very significant one way or the other, because the amount the company buys back is about 1.5–2%, which is what even Morgan Stanley is expecting this time around. And plus the free float in the company is very large with a low promoter holding. So the stock, gets excited. It provides a cushion to the stock price. So it's a positive signaling mechanism by the promoters, and plus it rewards the shareholders. So it's a positive. So we'll have to wait to see the amount. 10 to 14,000 crore rupees is the estimate right now.
Prima, thank you for that. The stock, of course, has also gone up 7% in the last two sessions in anticipation of this buyback. So keep a watch on Infosys today. Take a short break. All the updates from Wall Street on the other side. Stay tuned. Welcome back. Now on to Wall Street, which was a mixed session yesterday for the benchmark indices there. Both the S&P 500 and the Nasdaq hit new highs, but then cooled off from those elevated levels. But the Dow Jones was the underperformer, ending with losses of over 200 points. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Stocks were mixed in Wednesday trading, with the S&P jumping to a fresh record after wholesale prices in August unexpectedly fell. The Dow was down 220 points, but the S&P 500 climbed 19, and the tech-heavy Nasdaq, scoring a record as well, was higher by 7. Wholesale prices surprisingly saw a slight decline in August, according to a new Labor Department report. The producer price index dropping 0.1% for the month. That was well off the market estimate for a 0.3% increase. The measure could give the Federal Reserve another green light to cut interest rates at its meeting next week. Meantime, Oracle saw its best day on the stock market since 1992 after ending the day nearly 36% higher. The surge came after the company reported bullish cloud demand numbers. CEO Larry Ellison, whose net worth is largely derived from his 41% stake in the healthcare giant, saw his fortune rise by more than $100 billion on the day. It's the biggest one-day gain in history. He also unseated Elon Musk as a result as the world's richest person, according to Bloomberg's Billionaire Index. Oracle has been one of the biggest benefactors of the artificial intelligence boom as AI companies invest heavily in the infrastructure needed to build large language models. That's what's happening here in the U.S. Back over to you in Mumbai.
Bertha Coombs, thank you for that update. And as she was highlighting, it was Oracle all the way in yesterday's trading session, and that 36% surge in the stock price, which was the highest since 1992, helped its co-founder Larry Ellison temporarily become the world's richest person, surpassing Elon Musk. Ellison's wealth soared close to $100 billion post those results, and the increase lifted his total net worth to $383.2 billion, according to the Bloomberg Billionaires Index. The other major trigger on Wall Street yesterday was the wholesale inflation data, and that surprisingly came in better than expectations. In fact, negative inflation compared to expectations of a growth, and now that has opened the door for a potential Fed rate cut next week. Let us see what David Solomon, the chairman and CEO at Goldman Sachs, had to say about this wholesale inflation data.
I think about where we are, there's still more work to do. And so, I think it's uncertain. I've said it a number of times. I think there's going to be a stickiness around how this all settles out. And I think we're continuing to see indications that that's something to watch very closely. So trade policy is still getting negotiated. It's still getting implemented. The administration has a clear point of view, but there's uncertainty around where this all lands. And there's no question in my mind that it's having an impact on growth. That impact on growth is hard to quantify specifically, and I think it's also very dependent on where a lot of this lands. There's obviously litigation now going on around some of the reciprocal tariffs. We have to watch that closely. There's still trade deals that have to be negotiated, particularly here in North America. So I'd say there's still uncertainty. There is an impact to growth.
Now, a federal judge granted temporary restraining order blocking President Donald Trump's firing of Fed Governor Lisa Cook for now. Now, the ruling means that Cook will remain on the board of the central bank until her case is heard. Steve Leisman has more on this.
Fed Governor Lisa Cook prevailing in every major legal point in a decision last night from a D.C. District Court judge, clearing the way for her to keep her job and participate in the upcoming Fed meeting, but the White House suggesting the case is not over yet. Judge Giacab issued a preliminary injunction against the president's firing of Cook, writing, quote, "The public interest in Federal Reserve independence weighs in favor of Cook's reinstatement. That independence is critical in helping the nation's banking system to promote stability." Cook had been, of course, accused of mortgage fraud for stating in documents that 2 homes were her primary residence. The president fired her in August. She immediately brought suit to stay the firing. The Justice Department opened an investigation, but Reuters reported recently that in the past 8 years, only one such case similar to Cook's has ever been prosecuted. Judge Cobb found that Cook is substantially likely to win on her claim that the president violated the Federal Reserve Act in firing her. On the 3 main elements, she found that firing for causes limited to actions taken in office, the court can review the president's decision in this regard, which the administration had argued it couldn't, and Cook was denied a right to respond to these charges. The judge several times relied on a recent Supreme Court comment that the Fed was different from other agencies. The White House spokesperson in a statement saying, "This ruling will not be the last say on the matter, and the Trump administration will continue to work to restore accountability and confidence in the Fed." Remains to be seen if the administration can be successful in getting an appeals court to overturn Cobb's ruling before this meeting next week, or if it even tries, the case could be headed to the Supreme Court. If the Supreme Court affirms this decision, it would for the first time create precedent around the Fed's independence and the ability or lack thereof of the president to fire a Fed governor.
Steve Leisman, thank you for that update. Take a short break. On the other side, we get you excerpts from our conversation with the chairman of Raymond as the company completes 100 years. Stay tuned. Welcome back. Now, Commerce Minister Piyush Goyal has said that India's active negotiations are underway with the European Union on reaching a free trade agreement. Speaking at an event in New Delhi, Goyal also said that a trade partnership cannot be one-sided.
No business deal, no partnership, no friendship can be one-sided. It has to be a win-win for both. In India, friends, we have a saying that you can only clap with 2 hands. And that's the kind of relationships we are creating with the rest of the free world, with the democratic world, with the developed countries, and with our friends.
Now, in the latest on the Russia-Ukraine front, the president of the European Commission, Ursula von der Leyen, has spoken on the ongoing war, saying that Europe will stand in full solidarity with Poland and calls for more sanctions on Russia. Listen in.
Europe stands in full solidarity with Poland. Putin's message is clear, and our response must be clear too. We need more pressure on Russia to come to the negotiation table. We need more sanctions. We are now working on the 19th package in coordination with partners. We're particularly looking at phasing out Russian fossil fuels faster. We're looking at the shadow fleet and at third countries.
Now, Raymond has completed 100 years in business, and our colleague Shilpa Ranipeta caught up with Gautam Singhania, the chairman of the company, to discuss the growth drivers going forward, the impact of tariffs, GST and the festive season. Listen in.
Raymond started a small woolen mill in 1925 in Thane, and from there it's come a long way as 3 separate companies: lifestyle, real estate and engineering and auto. Moving forward, I don't know what's going to happen over the next 100 years, but certainly we focus to create shareholder value, and hopefully 100 years later, it's impossible to tell, but we should be many times.
Now you have 3 independently listed entities. What would you define as growth drivers for the company going forward? Where do you see the most amount of growth coming from for you?
I think each one has its own strategy. We'd like to see each company grow at least 20% a year in the top line. 15% a year in the top line and 20% in the EBITDA. So each business has its own strategy.
Right. Okay, fair enough. And, how do we view the textile business also going forward, given the macro uncertainties that we're seeing with the U.S. tariff situation currently?
So the short term, there is going to be some issues, but, long term, people are going to need clothes to wear. India has a large population of 1.4 billion people. And with the GST 2.0, the rationalization of GST, I think there's going to be a lot of demand fueled, so which is good for us.
Right, but then when GST also garments above 2,500 still attract an 18%, do you see that having any impact, and how do you see the festive season then panning out?
No, it's already gone up from 1,000 rupees, so the larger part has come lower. Okay. And the festive season is looking good just now, so I think there's a buoyancy. We've seen our bookings have been good so far, and let's see how it goes.
Right. Just coming back to the tariff question, how are you sort of right now, navigating the short-term impact that you see, and, how do you see the U.S. market also then going forward?
So you're looking for new markets. That's the whole game, is to look for new markets.
Which are the new markets?
All of Europe is there. Okay. We're looking more in Japan. There's so many markets that are there. US is not the only market in the world.
Right. And how are you seeing the real estate market also going forward? There was some discussion today about the redevelopment in Mumbai also, and how, that's probably not been panning out the way. How do you see the future? Because you have a large focus on the redevelopment part as well.
So we're not really that much in the redevelopment. We're focused on affordable luxury, and I think the affordable luxury sector is good.
Right. Okay, fair enough. And sorry, finally, for the engineering business also, if you could just quickly spell out the growth drivers that you see going forward. I know there are different under that also, but where do you see the most amount of opportunities?
I think
is it defense?
Aerospace and defense is really clearly the growth sectors there.
Right.
And with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call on the other side to set you up for this all-important trading session.